Just about around the early 90s, Nigeria had 120 commercial banks. Then came the mid-90s with the, what you called, the, what's the second that was thrown in during the military days. Then we got about 24 banks down in one single day. That was around 1994. So we were down to about 95. Then we came down to the early 2000s, of course, 2004, 2005, the banking sector consolidation. So we got 95 banks reduced to 25. Then in the last 2-3 years, we've seen about 3 other banks join. So we're now about 27, 28 banks in Nigeria. So from the highs of 120, we're now done about 35. So it's been a long road, an evolution of the banking system. One of the former bankers still around, who's been around for quite some time, he's here with us in the studios this morning. Boniface Achizia is a policy analyst, and he's since retired from banking. So let's do some banking or old banking with him and see if he knows anything new that the new folks now around are doing with financial technology. Good morning.
Thank you, Professor.
Your era of banking was that of the Ichioku man, isn't it?
Well, that's when you had your tally number.
You had your tally number.
I remember this advert, you know, that's Zebudaya, you know, as an advert, you know. When
Chief Zebudaya Okoregwe Nwobodo, alias 430,
oh, dear.
To make it complete.
You have it all, you know.
I have it all.
And it's an advert.
Am I that old enough as well?
you are getting on. You know, the day was sure, you know, carrying his mats, you know,
Yeah.
he was going to sleep, you know, I think that's
in a banking hall.
Banking hall. I think banking has come a long way. I think that's exactly what is happening now. And now we're having fintech. It's a fintech era.
People have their banks on their mobile phones.
Mobile phones.
Those folks don't know where we. I'm not sure these young folks know how long.
Well, I think that you know, even some of us, you know, we're embracing it. And one of the things we find is that the elderly ones like us, you know, so we're slow in catching on. So there's all sorts of issues, you know. But when you remember, I used to say to my PA, you know that we don't go to banks anymore. You know, so before you went to the bank, you know, to do some transfers, you know, to pay some bills and so on and so forth. And now just you have an app, you know, a mobile app,
Yes.
and then you sit down.
In those days, you need to go with your water bills, water rate bills for those that had water.
NEPA bill,
yeah, you
so
go
on,
with NEPA bills.
and then there's no
NITEL bills.
NITEL bills and so on.
So you go into the bank with a sheaf of papers, and it has to be gone manually through.
And you know, that then had also complications in the sense that you go to the bank and then the place was crowded, you know, and so on and so forth. So I think the thing is coming a long way. And then you pay that money, and then you're looking for value to be given.
Remind me, why didn't we have passbooks in those days as an evidence of deposit in a bank?
Well,
a very small piece of...
We had passbooks for savings account.
For savings account.
Yeah.
I remember. Very something small like this.
Yeah,
a small piece of paper.
It was a savings account where you paid money, then it's entered there and so on. And manually. And then if there are errors in the entry, it will be telling you you're in trouble. But there's no documentation elsewhere. And so, but now these things are there, you know, so you do a transaction and then you get an alert, you know, so there's a credit alert, you immediately know your balance and so on. It's on the move. And so I think that banking has come a long way, you know, and if you begin to think of banking, going back, you know, the fact that we had to struggle, had to go to indigenization program because we thought that...
I was about to ask you, what was responsible for this evolution that we've seen over the years? Was it the fact that we pruned down the number of banks from the bank failure days of the late Sani Abacha regime, in which it chased bank directors, the bad debtors, threw a number of them in jail? I remember at least 2 former presidents of the CIBN went to jail, who were bank CEOs. Another one was a bank chairman, and I remember that in the mid-90s. And then we had Soludo with his own universal banking consolidation regime. Then His Royal Highness, now the Emir of Kano, Lamido Sanusi, also came in and said, look,
sacked 5 MDs
in one single day, and closed about 5 banks. Later became about almost 10. Then it looks like it's quiet over there. So what really was responsible? Was it policies? Was it the interventions of the central bank governor? Or was it the general environment? Or was it something from the outside of our environment in terms of technology that brought us to where we are today?
No, I think that's a combination of factors. Combination of factors in the sense that at some point in time, when Soludo came and unleashed this consolidation, you know, what he tried to do was he looked at the banks in the country and he said to himself, you know, these banks are not big enough. You know, so you have this single obligor limit. Yeah, that says, you know, a bank shouldn't lend more than 1/3%.
But we had prudential guidelines before that. I remember that booklet on prudential guidelines. Yes. Was that part of the evolution?
Well, prudential
guidelines says...
Well, what happened with the prudential guidelines that it helps you to make sure that to bring about some uniformity in the way credit quality has been recorded. What's happened in the past that you decided, so if somebody is my friend and I give the person credit, and I could just sit on it and say to myself, this credit is going to go bad, so it became subjective, so it's my friend, eventually he's going to pay because he knows I'm here, he knows, it's going to put him into trouble if he doesn't pay, so you had that sort of situation. And so what prudential guideline tried to do was to clean out the process and say, look, let's have some basic criteria about saying that when credit has been outstanding for so long and nothing has happened, you say it's a suspect, and so on and so forth, and it's lost.
But despite the prudential guidelines, you bankers still didn't, I'm trying to find a very nice word to put it. You bankers still circumvent the prudential guidelines.
Yeah, but banking, sorts of loopholes have been exploited. You talk of bank profit. I was calling somebody the last time, and somebody came up and said to me, how come the banks are, in spite of recession, all the banks are reported, handsome profit, nobody, and I said, well, banking is an interesting business.
You guys are smart.
I think it's interesting business.
You guys are smart. Yes or no?
Well, no, I'm not being smart. I mean,
you folks are smart. You guys have a way of beating every rule in the books. Everything the central bank throws at you guys, you have a way of finding a way around it.
I think it's survival instincts, and that's exactly what I'll say. In the sense that, people, they want to survive. You're a manager, you're on seat, and you're going to be assessed, based on your performance, as you expected. And so you're going to perform based on a performance. So you are to graduate in the thing and make sure that. You see, the thing is, when you're talking of reporting your accounts, it's at a particular day in the year. So that's why you have that general of issues. So if I know that my account is based on the calendar year end, 31st December, all I have to do is to make sure that on 31st December, the thing is the way I want it to be. That's all I have to do. Now, so if it means that I'll go and get borrow some money and put some money in the system to boost up my deposit base and or lend some credit and so on, I can almost configure and push and determine, what it's going to be.
Yes. And so now we have a uniformity in reporting date for banks.
That's why. But before it wasn't.
No,
before,
I remember. I remember. I think it was Soludo that I brought in the single account year.
March ending, September ending, and then December ending. And that side, what he did was he created ample scope. I will go to you. Your accounting ending is end of December or September, and mine is 31st March. And I go, oh boy, look, I need some money, some accommodation.
Balance the books.
Yeah, overnight lending is part of the terminology. So, I get money, I get credit for you overnight, and I put it in the books. And you
look good to the regulators.
Yes, and so when I said to Guy, he was asking me. And so when you see the thing, you take it with a pinch of salt. I'm using this word, pinch of salt.
Let's now talk about the common man side of banking. Yeah. Because the whole conversation is that a lot of folks are still upset with you bankers over the decades because bank charges remain very high. You folks were doing manual operations in those days. Bank charges were high. Then technology came in, and charges are still really high. So what is the dividends of financial technology here?
Well, I think that the dividends of financial technology would come from the fact that the ease of doing business to a large extent. And banks, for shouting out loud, they have to make some charges. They have overheads to carry. So even the technology doesn't come free. Sometimes you have to lay out some good money, to have good quality technology and maintain it in operation, and put people, who have some expertise, to make sure that it operates optimally. And so there are areas of expenditure the banks have to carry. And you talk about premises and so on. And as we're talking about inflation, and we're talking of cost of doing business, electricity and so on and so forth, banks also have to absorb this. And then you take something like power supply. Banking business, you can't shut down. You can't shut down your banking operations for a second because you must have this 24/7 more or less. Except when you shut for the day or in some very remote locations. And so some banks, so power supply must be steady.
Are you saying that there's more pressure on today's less than 120 banks to perform than before, because we've had increased in terms of bank accounts. I'm sure we've had far more because of population. And with financial services and technology, do you think banks today are even under more pressure than the days when you were still in the banking hall?
Well, I think that what's happening is that the pressure, the character of the pressure has altered. And so when you had issues, trying to balance your ledger at the end of the day, and you're struggling to find this 10 naira that is missing and so on and so forth, that has been taken off. And so now, so it's moved on. So now it's moved on to more faster, dimensions, in the sense that now the thing is being done online and so on. It's faster, and so you have mobile facilities, and people are having to operate, and you have to make sure people have their mobile systems. Things like making sure that the security of the system, is not affected. So you have mobile operations, and so make sure that also you build in scalability, into what you're trying to make sure that, as the business grows,
You seem to be learning the language. Listen, you said you're catching up slowly, but you got all the terminologies rolling off your tongue like you're still in the banking hall. This is amazing.
Yeah, it's amazing.
You've been spending your retirement learning some new tricks.
Yeah.
Wow, that's surprising. So I'm going to ask you that very personal question. How are you coping with this rapid 1 day, 1 minute change in the banking sector here, in which we're now talking about virtual banking, digital banking, and banking halls where you get in and it's robotics that will be talking to me and not humans?
Yes, I think we're talking about cryptocurrencies and so on and so forth. You've not even talked about that.
Oh, yeah. I don't know, cryptocurrency.
Virtual currency,
someone says,
money.
Well, Jamie of JP Morgan says it's a fraud and all that. I don't want to get the folks who are cryptocurrency traders and beneficiaries upset this morning.
Yes.
I'm not a friend of cryptocurrency, and that's a full discussion.
I'm not too.
That will belong to the same old school then.
Yes,
but again, how are you coping with the new technology? Almost every day, things are changing in the banking sector. Why are the downsides to this?
What I do to a large extent is that I confine myself to those areas in which I think I need services. So for instance, I need to do transfers, and so I have my mobile app. I have mobile app of two banks. So occasionally, if I'm in a place, and then the network issues and so on. So when you're talking about this mobile technology, there are downsides in the sense that you can have network issues and so on and so forth. And also, I talked about security issues. So that people are beginning to hacking. We talked about. Remember Donald Trump and so on, his elections, hacking and so on, and causing confusion. So
Are you scared? Are you scared that with technology, you are more likely to lose your money than in the manual days when you were in the banking hall? Which one is more easier to steal your money?
I think that it's far more easier to steal with technology than with manual. Yes, and manual has to take somebody who's within the system, who has access. But if somebody gets your
PIN number
and so on and so forth, and then what I read something in the social media. Is to say that this. POS, what do you call it now?
POS
ATMs in remote areas, you better be careful. Some of these fraudsters, they've devised a means of making sure that Friday evenings they target you, and if you're there and they have a group that's standing around the place and watching and waiting. And as soon as you go in and you want to withdraw money as you're coming out, there's a gun that says, better give it to me. And that's a gun, and then you better go and make sure, tell me how it operates, before I allow you to go. And so you go there, and then so you get a PIN and so on, and they test. Meanwhile, you wouldn't have access to your bank until maybe it opens for business
on Monday.
We
need to fix that. No, that's been serially reported. We need to fix this Friday to Monday.
Yeah.
Why do we still go? Banks still go to sleep on Friday and wake up on Monday morning when folks need money and do transactions on weekends, and thieves and robbers wait for weekends when they know the banks are closed.
No,
do you think that's a major issue for financial technology?
No, I don't think that's a major issue in the sense that people now don't need banks to be open to do their operations. I think one of the things you've not talked about is really the future of branch banking. I think that's very important, because I think that as we move on, that's going to be an issue. And so you find that you have branches everywhere, and not many people going in and coming out. Well, maybe those who have access to all these platforms and so on and so to make the payments, so the lower level persons might still, go to the banks to withdraw money and deposit and so on and so forth. It will come to a stage, some bank branches in sophisticated areas
will have to go digital.
No, they have to go digital.
Totally.
And digital, and then you come, and then you open the branch, and you don't have too many people walking through the door.
I think you still have a lot more to learn. Despite all the new technology you're learning faster than me. I got to come and learn from you.
Thank you, Joseph.
Boniface Chize, a former banker and economist, as well as a policy analyst. Let's come back to you after the break. We'll go back to the marketplace.